Hello everyone and welcome back to the channel. This is Fair Value Finder and today we are taking a look at another head-to-head. And this one is a pizza head-to-head. We're pitting Domino's Pizza up against Papa John's, tickers DPZ and PZZA, to see which pizza company is a better buy. So right now we're looking at just a general summary. We have financials broken down on this page, but things of note before we get into that, share count is very similar on the two of these. So we break it down on a per share basis. So we have an apples to apples comparison, and we almost have that right off the bat with these stocks. And also value wise, they're both about 9% overvalued. So that is something interesting. We're seeing, at least on this page, it looks like Domino's is a much better current value, but Papa John's is much better growth. Therefore, something like Domino's, we'd be looking for under fair values, probably with a pretty big margin of safety. And Papa John's, we could be a little bit more risky and go closer to the fair value, maybe even above if there's enough growth baked into the future. But one thing to note here, Papa John's has been raising their share count recently. Looks like 2020, they started to issue shares again. They were buying it back before that, so hopefully they stop. But that is a huge red flag, and we are going to have to correct these numbers for that dilution that they're bringing in. So let's get into the financials and see what's going on here. Revenue per share, we see it's pretty flat at Papa John's, and Domino's much higher, very quick growth. So Domino's is winning on current revenue and the revenue trend. Cost of goods, of course, Papa John's is going to win here unless their margins are way worse than Domino's. And again, we're seeing a pretty flat line where Domino's is rather steep, at least through the first portion of this graph. Gross profit, very similar story across all of these. We are seeing Domino's is winning on gross profit dollars for value and growth. They're winning on gross profit percentage, but Papa John's has a better growth rate in their gross profit margins. This is a pretty big difference here in the gross profit percentage. For them to be in the same industry, Domino's fetching between 35 and 40%, and Papa John's fetching 16 to 21%, definitely shows how much stronger Domino's Pizza is. Expenses per share, very similar to the other graphs that we've seen for Domino's. It's just straight up and then kind of leveling out more recently. And Papa John's, very flat, just slow growth. And it might not look like it's a whole lot of growth because of the scale here, where we have to fit Domino's growth in. So Papa John's looks rather flat. But it is moving. It is moving up 10%, somewhere in the realm of $50 to almost $56. Expenses as a portion of revenue, we see a flat line for Domino's and a higher line for Papa John's. Not a surprise here because the margins that we saw above, but that means that the net margins are going to be a very similar story. It's winning on expenses, lower, not growing as fast. Domino's is winning on expenses as a portion of revenue, at least the current value, and Papa John's is winning on the trend there. Oof. These net margins do not look very good for Papa John's. Domino's, we see, again, way up here above Papa John's, and Papa John's has dipped into the negative or essentially break even multiple times over this time frame. And we see their margins here are barely able to beat 3%, while that same year, Domino's was doing 10%. So 3 times the margin. Definitely an important factor when we're looking at these stocks. Earnings per share, we kind of see a similar growth, a similar trend with the two of them, except Papa John's seems to have led Domino's in their spike and their dip by a year, which is something interesting. And then earnings yield, we see that recently Papa John's surpassed Domino's in earnings yield. As long as they come in with analyst expectations this year and their current share price, they are a better value proposition. But typically, it's been Domino's here. So we saw a lot of things where Domino's was winning here. It comes down to Domino's winning 8 on current value and 4 on the trend, while Papa John's wins 2 on current value and 6 on the trend. So again, we see that Domino's is a better current value and Papa John's is a better growth. My issue here is really these margins. Papa John's needs to get these up to Domino's levels. I mean, they're making some progress slowly, but if they really want growth, that's what they need to be doing. So looking at everything else, there's 70,000 less shares of Domino's. So you do own a larger portion of the company when you buy in to the stock. And they are buying back shares. So you are getting a little 3% boost on your ownership every single year. While Pizza Hut, you're getting diluted by almost 4%. Shareholders' equity, it must be a very debt-heavy business, the pizza business, because both of these have negative shareholders' equities. Not massive balance sheets, but their debt outpaces their liabilities, which definitely not something that we like to see in stocks on this channel. Shareholders' equity is very important. The balance sheet is important. Cash flows, we do have much stronger free cash flow out of Domino's. Not a whole lot out of Pizza Hut. $1 per share compared to 11. That's why we're seeing dividends of 440 compared to 154. So I'm leaning towards Domino's being the better buy here. They may not be winning on trend, but their cash flow, I do not like the cash flow that I'm seeing over here at Papa John's. Liabilities, of course, Papa John's has lower liabilities. They've got a book value closer to 0. They win on the dividend yield and the share price. Papa John's is a much cheaper stock. PE ratio, Papa John's PE is just insane. There are some years where it was crazy numbers. Their earnings are not too consistent. The consistency of earnings, the free cash flow size, the debt, the balance sheet difference, cash per share dividend, everything here. Although Papa John's has better growth, I would still say that Domino's is the better stock. And if I were to buy one of these, I would buy Domino's over Papa John's. Although I would wait for it to drop at least another 10%. Probably more in the realm of 15 to 20% would be where I'm really looking at it. And if you guys are interested in it, like this video, leave a comment down below, and we'll do a dive into Domino's on its own. But I wanted to pin these two up against each other so that way we can take a look at the pizza industry and see if you want to buy a large pizza chain, which one would be the best to buy. And so I think the next step is going to be to put Domino's up against Pizza Hut and see if they can out Pizza the Hut, because they surpassed Pizza Hut in revenues recently. And I want to see if they're a better buy or if Pizza Hut's better. So I want to thank you guys for watching this one. Like if you enjoyed the video, comments if you want to do a deep dive on either of these, or what other pizza company should we pin up against the winner here, Domino's. And subscribe so you can stay up to date with everything. And I'll catch you next time.